What's good, everybody? Welcome back to a new week. Welcome back to another live stream. So, in usual fashion, let's take a look at what the media is saying about Bitcoin right now. So, we got the Financial Times here. They said, have inflows into Bitcoin funds dried up? We're going to get onto that. Got CNBC. Bitcoin drops 8% in a week as volatility spikes to near 1 year high. Bloomberg. Options show Bitcoin traders are preparing for a deeper slump. The open interest for puts has jumped over the last 24 hours. Bitcoin ETFs have seen 4 straight days of outflows. So it's a similar story to what we're seeing at the back end of last year. We know the media right now is one-sided, very much so one-sided. So it's not a balanced view at all. It's putting a lot of information out there that doesn't get people on the right page, like yourself, that you need to be to put yourself in a position to take advantage of the situation, call it a gift right now, that we're seeing in Bitcoin. We're going to go into all of that in a lot more detail and definitely give you guys the information that gives you a much more balanced view and actually gives you an insight into what is really going on and then how you can actually go ahead and take advantage of that. Because if you go ahead, just read the media out, the headlines from the media, all it will make you want to do is sell your position and turn your back to the gift that Bitcoin is giving you right now. Before we get into all of that, let's take a look at the price of Bitcoin, what it's been doing over the weekend, last couple of days. If you would just look at the price right now, very much moving sideways. We call this consolidation. We call it choppy price action. Very uninteresting. Nothing crazy is going on with price right now. Bitcoin's standing at 66,973, so just under $67,000. Over the weekend, price pretty much just moved a little bit higher, but nothing significant. We haven't made any key breaks, hasn't moved to any significant areas. It's very much in the same technical position that it was in Friday. It's not much movement in price, but that is a good thing, and that is what we talked about and we discussed when Bitcoin was at 74,000 at its all-time highs. Did you give you guys a heads up that this is what we would expect? We would expect a decline in the price of Bitcoin to around the mid 60s and for it to just chop around, because we are still a fair bit of time away from the halving event. Okay, the halving event that is coming up in, let's say, call it 23 to 25 days time, somewhere just after the middle of April, so 20th of April. The exact date isn't known, but it's around the 20th of April, around the 15th to the 20th of April, depending on mining activity and all that kind of stuff. So that halving event is a key reason why we are seeing we've seen price decline. So one of the reasons, but also it's a big reason why we're seeing price just chop around and not do anything crazy. But this is all part of the story, and this is what I did discuss when Bitcoin was standing at 74,000. There was a lot of media talk. Okay, there was a lot. It did make the headlines. A lot of people were talking about crypto and Bitcoin. It did come on a lot of people's radars. But all of that has kind of disappeared. It's evaporated. Now we're in a phase where nobody is talking about Bitcoin anymore. There is less and less headline news about Bitcoin because the price isn't doing anything spectacular, or it's not doing anything out of the ordinary. When price did decline, there was a lot of coverage on it, and we went through that last week. Coming into this week, there's still a little bit of trickles of coverage on Bitcoin, but there's nothing interesting to talk about right now. But that is often the best time to be taking a look at something when it's not in the spotlight, because you already know what the next chapter holds. It will be discussed heavily in the spotlight when Bitcoin is standing at 80,000, regains all-time highs, and people like yourselves would have wished that you were prepared and you got in positions. Now, where it's standing at a 15-20% drawdown from its all-time high, versus when it's at 80,000 and you don't have a position and you've missed out on a lot of gains. Let's talk about the ETFs, because the ETFs did make very interesting moves last week. If we look at this, shows you how much Bitcoin the ETFs, the spot ETFs in total, have accumulated week after week after week since it was launched back in January of this year. Now, the green bars are going to represent weeks where collectively the ETFs bought more than they sold, and the red bars are gonna represent and show when the ETF sold more Bitcoin than they bought. Why do we want them to buy Bitcoin? Well, this is a new wave of investors coming into Bitcoin that we've not seen previously to 2024. 2024, we saw a lot of sophisticated individuals, we saw retail participants like you and I, but we didn't get access to the pool of capital, which is the institutions and the boomers. And collectively, they own the majority of the wealth in this world. But the game changed at the beginning of 2024 with the launch of the spot ETFs. Now they've come into the scene. Now they are heavily interested and showing that interest through purchases of this spot ETF through providers like BlackRock. And then that's why we're getting billions and billions and billions of dollars coming from institutions, coming from boomers, coming from asset managers through the spot ETF. The difference between this capital and a lot of capital that we've previously seen in Bitcoin is that this capital coming into Bitcoin is much more mature, it's more sticky, and it has a longer term view in terms of what the purpose is. So whereas back in the day, or pre-2024, where we have billions of inflows coming in from retail, we know that when times get tough, when markets pull back, retail are going to sell. That's not the case with this new wave of investors into Bitcoin. They have a longer term horizon. They are much more sticky with it. Okay, so they're not just going to sell when we get a drawdown in the markets. That's not how they operate. They're going to be holders of Bitcoin for a long time. So that's why it's important to get that they've come into the scene, because ultimately they've just added to that whole maturity story, that evolution of Bitcoin, which is what we're going through right now. If you look in the chart, we had the first negative week, so there were more selling in total with these ETFs than there was buying, and we haven't seen that for 8 weeks. It was 8 weeks ago that we saw a minor week of net selling, and we've now just seen another week from Monday to Friday last week where we've seen the same thing. So 13,500 Bitcoin net was sold. So some ETFs would have bought Bitcoin, some ETFs would have sold Bitcoin, but the average of those ended up in a down week. So that's why when you hear the FT saying has options ETF inflows dried up, they're talking about this. When you see Bloomberg saying the same type of thing, they're talking about this. But that doesn't tell you the full picture, right? Doesn't tell you the full picture at all. It only gives you a very small snapshot of actually what's going on. Because if you look at that, it looks like oh no, the ETFs are actually selling, institutions are selling out of Bitcoin, asset managers are getting out of the picture because maybe they see a train wreck situation coming. That's absolutely not the case. Because if we go ahead and look at what is the best ETF to look at in terms of giving an idea and an understanding into the positioning of the institutions and asset managers and the boomers. And once again, you want to know what they're doing because they own the majority of the wealth. In aggregate, they own right now over 1% of the entire supply of Bitcoin. And there's much, much more capital to be funneled in through the BlackRock Spot ETF. Okay, so they're a very important piece of the puzzle here. The most important piece when it comes to understanding ETF dynamics and flows. And if you understand ETF dynamics and flows and what is truly happening, which is separate from your day-to-day price movement of Bitcoin, you can then act and align yourself properly to get prepared for the massive move that is coming. You can see that this is a very different picture to the one I just showed you. For 11 weeks straight, so ever since the ETF was launched, the BlackRock Spot ETF has added Bitcoin. There's not been a single week since its inception back in January, so when it started, that we've seen the BlackRock ETF sell more Bitcoin than they've bought. They've been buyers, net buyers every single week. So they've just been stacking and accumulating. That's why you have these consistent stair-step-like bars on the chart right here. Last week, in fact, they bought 12,500 Bitcoin. So that's a lot of money. Okay? That's a hell of a lot of money that the institutions, the boomers, the asset managers, the hedge funds, the VCs have funneled in through the BlackRock Spot ETF. So what's going on here? Well, we have this one legacy vehicle that people used to put money into, and that's through Grayscale. And they started back in 2013, but it was as a trust. It wasn't a spot ETF, but it was a way for people to get access to Bitcoin, but it wasn't listed. It was on an unlisted market. In January, when the 9 ETFs came on, Grayscale also converted their vehicle to a spot ETF. Very simple. But because of the high fees that they were charging, remember they had this monopolistic power because they were the only one. If you're the only one selling something, the only one providing something, you can charge a higher price. But when 9 other entrants come in, and entrants that have better reputation than you, have been around longer than you, more well capitalized than you, more well everything than you, you're going to have to either reduce your fees or suffer the consequences of people leaving your business. And that's what's happened. So we've been seeing people leave that legacy vehicle that now turned into a ETF. And what has happened is the other ETFs just didn't buy all of their outflows from Grayscale. That's it. And the reason why they didn't is because we're in this wait and see type of market. Because we're so close to that halving event, we're only 25 days away, call it. People just want to wait and see on the sidelines what happens with price. There is another pullback. Let's just wait and see. So it's not that they are not going to be buying Bitcoin. They're just going to be delaying that action. And that delay of action had just caused that drop in net outflows that we've seen last week. But it doesn't mean anything. It's meaningless, right? Because Grayscale can go to zero, which would be a lot more outflows from here, but all of those outflows would just be consumed by the other ETFs like BlackRock. So it's an interesting thing because in markets, right now the biggest headwind to Bitcoin is the outflows from Grayscale. But that's not new news. They've been having outflows. People have been selling out of their vehicle ever since the ETFs launched back in January. Every week they've been selling out, and they're going to continue to do so unless Grayscale do something like go to zero fees or give some other sort of incentive for people to put the money into or keep their money there, then go to the biggest asset manager in the world, $10 trillion asset under management, which is BlackRock. So that's the situation. So it's a massive positive that even in a 15% drawdown period from its all-time high, you still got BlackRock on behalf of its investors adding to their stockpile of Bitcoin, which is now in excess of 1% of the entire supply of Bitcoin. So when you see that type of thing where price is doing one thing, but underneath the surface, the fundamentals are showing you something very, very different, which is what's going on right now. The institutions, the boomers, the asset managers, the VCs, the hedge funds, they're still buying Bitcoin. They're not selling Bitcoin. Why are they buying? Because they're getting prepared for that much larger move that is pending, that is coming, that is on the other side of the halving event. That is what they're getting prepared for. And that is what you should get prepared for. You should put yourself in a position, align yourselves in position with trillions and trillions of dollars of smart capital that is getting prepared to double, triple in excess their money over time in Bitcoin. That's the story here. That's the true story. But the media isn't going to put it out like that for you because they want to put you in a position where you are achieving financial prosperity. That's the story. I showed you this chart a couple of weeks ago. I did say that BlackRock is going to widen the gap between everybody else. The asset manager itself is just too large. They're just too prominent. They've just got too much power. 243,000 worth of Bitcoin that they control on behalf of their investors. That was 200,000 last time I spoke about it. That number will double. They'll get to the point where they are controlling 500,000 Bitcoin. 2% of the supply. That's because you're going to get more of these institutions, more capital from the VCs, the hedge funds, and all the others pouring into the ETF. There's just a huge backlog of capital to get deployed into that ETF. But right now, it's not going to be deployed now because we're so close to that halving event, and there is a next leg of price that we'll talk about in a minute, price movement that they may be waiting for, but they are most definitely waiting for that halving event to be finished, for the dust to settle, and then they can deploy their capital. This is the type of story we're seeing. This is the type of picture, right? It's not that Bitcoin has dropped 8% and it's the most volatile we've seen in a year. That doesn't mean anything. That doesn't tell you where price is going. That's just a surface level snapshot. But the biggest story here is the foundation underneath of smart capital continues to be layered on thick. And that foundation plus other dynamics and situations that we're going on right now are creating a situation where you're going to see explosive moves in Bitcoin. And if you're not prepared, you will cry when you see those moves. That is guaranteed. Let's take another look at price, but let's take a look at it from the perspective of where is it going to go. So I discussed this last time where we're seeing this bottoming out type of price stability. And that stability comes at a pretty decent and a significant retracement level. And that's that 50%. And this is something I spoke about, I believe it was Monday last week. I told you that if we are to pull back towards this low 60s level, that's going to be a level where we should expect price to hold up and move into its next phase of consolidation or accumulation. And that's what we're seeing play out. But these things take a number of days to play out. So whereas price might not look so exciting right now, it's definitely setting itself up. And you've got this next layer of stability here as well on a bigger type of time frame. But for price to move into a more bullish position, you want to see it take out some of these highs that it's put in here. And it put these highs in conveniently at just under 70,000. So you got that 70,000 psychological level. So if price moves into the 70,000 plus territory, taking out these highs, so moving into this type of direction here, that's definitely a bullish setup. That's definitely something where if it was to move into that type of level, you probably get it moving back to all-time highs. If you see it clear 70,000 with ease. But as it currently stands, it's still in this type of accumulation consolidation phase, because we did just put in a higher low. All right, so this low is higher than this low right here, but it's got to take out these highs for it to be a confirmed positive move. So it's the kind of price action that isn't favorable to trade until you see that next iteration where it's more clear. But it's definitely price levels where accumulation is a very smart thing to do based on where price is going to be going after this. I did give you this intelligence last time where I told you we have these two lows down here, and you are going to get a build-up of longs, and I do believe these longs are going to get liquidated. It's just too perfect for them not to get liquidated. So I do believe you are going to see them liquidated, and for price to move down to that 57 level. 57 to 55 is the lowest that I see price going this bull run. And the chance and where that should happen, it should be after the halving event. So halving event, let's say, is going to be April, call it April 20th. That liquidation event should come at the back end of April. So last week of April, something like that would be my expectation. Because once you liquidate those longs, now you have the fuel, that explosive fuel for this thing to move well beyond 70,000. Because you're going to get a build-up of shorts at that 55 to 57 level. They're going to pound on the shorts. And when you start seeing a reversal in price after that liquidation of these longs here, you're going to get that short squeeze. The shorts are going to turn to longs. The longs are going to compound. You're going to get the media interest coming back again. All of these things are just going to add compounding explosive fuel for the price to move well beyond 70, get into that uncharted territory of 80,000 plus, and then really progress that bull run over the next 18 months. That's expectation for price. But in terms of where we are right now, as long as price stays under $70,000, it's still very much in a position of weakness. Still very much in a position to revisit the low of this accumulation phase of $62,000. Okay. Anything under 70,000, price is still in weakness. Even though we've seen a weekend move higher, doesn't mean anything until price crosses above $70,000, clean and closes above there. Below there, it's in a position of weakness. But again, that's just this phase. What's the smartest time to accumulate? In a weakness. What's the smartest time to start positions? In a weakness. That's where we are at right now. And that is why there is a lot of opportunity here. And you can take advantage of that opportunity because you have the right information. We got all eyes on 75,000 because 6.6 billion of shorts will be liquidated. And this is something I've addressed before, because what the market likes to do is it likes to create max pain. What do I mean by that? I mean that if it's moving up or even if it's moving down, whatever phase the market is in, it's going to move to positions where it can just take out a lot of longs, a lot of shorts, regardless if it's a bull market, sideways trading market, a down market. And that $75,000 level, I think back like last week or week before, market moved to 75,000, it would have liquidated 1.6 billion worth of shorts. That amount has literally times 4, times 5. Now we're at almost 7 billion worth. So it's inevitable in the market's quest to create maximum pain. Right now, bear in mind, it's liquidating long positions, okay, because we've been in this strong bull market. Prices dropped 15% off the high. You can imagine how many people have been taken out of their positions. For those who didn't have the right type of approach, or these type of short leverage traders, when you get that explosive move to 75,000 is inevitable, because the market must go ahead and liquidate all of those longs, almost 7 billion worth of those longs up at 75,000. It's inevitable. It's going to happen. This is interesting because what we got here is we got Bitcoin's on-chain activity is very low. So what do we mean by this? Well, we know behind the scenes there's the blockchain with all the transactions related to Bitcoin. When people are transferring their capital from their wallets over to their exchanges to do what? To sell, you're going to get an increase in that on-chain activity. If we're seeing very low on-chain activity like we're seeing right now, it means people are just holding the Bitcoin in their wallets and just doing nothing with it. They're just waiting. And what's interesting is we can see what the on-chain activity, so think of it as the amount of transfers from their wallets, which is in storage, over to exchanges like Coinbase. And we can see what they did in the last bull run, so back in 2021 versus now. If you look at that orange chart, you can see a massive spike of on-chain activity, meaning that a lot of people transferred their Bitcoin from their wallets to their exchanges like Coinbase when cryptocurrency was up at almost 69,000 back in 2021. You can see here, a million worth of activity. Why? Because they were getting ready to sell. Why? Because they weren't prepared to hold. And because of this spike in on-chain activity, so because of the amount of money that was moved over, and then after that, the amount of Bitcoin that was sold, it created this this bear market, this movement down. So that 70% decline that we saw in Bitcoin from the peak of this bull market to the end of the bear market. If you compare that to where we're at right now, we're not at that $1 million level that we were. You see that spike, that was 2021. We're down here at 200,000. So there's been barely any transfers from wallets to exchanges to do what? To sell. So it means that this phase that we're in right now is very different. So price is very similar to what it was back in 2021. Yes. But the dynamics and the construct of the market is very different to what we saw in 2021. We have no spike in on-chain activity. So we have no mass transfers from storage wallets over to exchanges to sell Bitcoin. The market doesn't want to sell Bitcoin. The market just wants to hold Bitcoin. Why? Because they know what is coming next. They know what is coming after this halving event. This is a very different situation to 2021. Now, if we are in a situation right now where we are seeing a spike in on-chain activity, so we're seeing, million plus in volume of movement from wallets to exchanges, I would tell you a very different thing. I would tell you we are getting ready to see a significant wave down in the price of Bitcoin down to 30,000 and below. We're not seeing that. So the market isn't in a position to get down to those types of levels because remember, we have this fixed supply and that supply is staying tucked away in wallets. So that's why this movement down, what we've seen right now, is only 15% and it's not 30% because the market doesn't want to sell Bitcoin. Regardless of what price is doing, the market just wants to hold, which is why you need to put yourself in a position to take advantage of what's going on right now. Because if the market doesn't want to sell the limited supply of Bitcoin, what happens when you get explosive demand re-entering the market? And that is coming. Why is explosive demand coming into the market? Well, after the halving event, we are going to see this wait and see phase finish. The halving event's going to be done and people are going to be in a good to go mindset where they are good to go to funnel billions that was just staying quiet now, but we're going to move into that good to go. So they're going to put that money into Bitcoin, back into Bitcoin, fresh capital, new capital, sideline capital. That demand is just going to be chasing Bitcoin. That's going to be an explosive reason for price to move much higher. That's just one, because then you're going to start to get the media putting way more coverage on Bitcoin. Right now, things have gone quiet. Okay, a lot of media outlets have no interest in putting out coverage on Bitcoin because price is just chopping away, not doing too much. We've just gone through that. When you start to get that explosive move in Bitcoin, when it starts moving back above 73,000, headline Bitcoin back up at 73,000, people are going to be like, damn, I saw Bitcoin at 61,000. I saw this thing at 60,000. I saw this thing at 55,000. I haven't got in. Now it's at 75,000. I need to get in. This creates that FOMO situation, okay? That is coming. That is not here yet, and that is coming. It's only a matter of time. You got several catalytic reasons why we're going to get an explosive price in Bitcoin. I'll give you another one. The largest headline, the biggest headwind for Bitcoin right now is Grayscale. I already told you, Grayscale is this legacy asset manager back from 2013, but now they've just been overpowered by the new 9 spot ETFs. Well, when we start to see outflows from Grayscale slow down or stop or reverse, what does that create? Well, you've turned a headwind into a catalyst. You've turned a headwind into a tailwind. Now what's going to happen is there's going to be no selling pressure. There's only going to be buying pressure as you get people funneling money continuously into the BlackRocks, the Fidelities, the ARKs, who control spot ETFs themselves. And that capital is just going to completely overpower a minor drawdown, a minor net outflow from Grayscale, or whether it turns positive or whether it's just completely flat. Now you're just going to get positive inflows. So now you're going to get massive chunks of money going into the ETFs. What does that create? That creates buzz, that creates hype, that creates excitement. Right now, we have this opposite forces right now. You've got Grayscale going one way, they're selling. You've got BlackRock and the others going the other way. So that's why you're getting small net outflows. But once you only have one force going one way, which would just be the positive inflows into the ETFs, what does that create? That creates a lot of money chasing a smaller supply, and a supply that a smaller amount of supply, especially when we're going into a halving situation where the new amount of Bitcoin onto the market gets cut in half. Just giving you a third and a fourth reason why you're going to get explosive moves in the price of Bitcoin. But it starts now. It starts now when the market is overlooking the true underlying situation here. I was just talking to you about this. So Google shows lack of mainstream FOMO. Again, the retail market, the retail component of crypto, of Bitcoin is just non-existent right now. It's all institutions, it's all asset managers, it's all VCs, it's all hedge funds. They're the ones laying the foundations. They're the ones setting up for much larger price moves. This is very different to what we saw in 2021. 2021, we know it's very much FOMO driven, heavy retail participation. That's just not the situation. This is the type of market that creates one stability, gives it the structure for much, much higher moves. And we're going to see that, just a matter of time. So we're just in the preparation stages right now. And if you want to know what things will look like, it will look like this. Because on the left, that's 2020. And you see where that arrow is? That was a 17% drawdown after an all-time high back in 2020. And in that phase, it was very similar to what we're going through right now, where we have negative media headlines, you have limited crypto coverage, you have a lot of the market overlooking, and then what follows? Explosive moves that really make you question your life choices. On the right, we're seeing a very similar situation right now, where we're seeing that pullback in and around that 15-17% level. What you're going to get after that, already told you, giving you the reasons. You're going to get explosive moves. That's why it's important to get yourself ready right now, because these moves are coming, and right now we are just simply in that setup period for these much, much larger moves. And they will be explosive, they will be powerful, and you will leave a lot of money on the table if you're not participating. That is for sure. All right, guys, that is the end of the live stream. Any questions you guys have, any comments, drop them down below. I'll catch you guys on the next one.